You're watching the Maggi Tax and Financial Show.
Today we're going to talk all about women. So I don't want to scare you off, but women do face some specific challenges in retirement. And one of the things that we see is very common with women is they tend to control the day-to-day finances maybe of their household, but they have a tendency to not be as involved in some of the long-term planning. Why do you think it's so important that women get involved in those long-term planning decisions for their financial lives?
Life is full of surprises, good and bad. But an emergency fund can help you manage some of the most unpleasant financial shocks that many of us, sooner or later, are faced with.
Today we're going to discuss some of the important elements of Social Security survivor benefits. Hi, I'm Robert Maggi, and I am the founder of Maggi Tax Advisory and Financial Group. We are a tax and retirement income planning company providing income strategies to individuals and businesses, and I partnered with my son Chris to offer a team approach.
And I'm Chris Maggi. I'm the owner of Maggi Investment Services, and I am an investment advisor, representative, and a fiduciary. Maggi Investment Services is a fee-based registered investment advisory firm providing financial planning and third-party asset management. As a father and son team, we believe we have the experience to provide custom-tailored investment strategies to help you work towards achieving your financial goals.
And it is great to be with you today and every week. Chris and I are really looking forward to helping educate all of you. I'm excited about getting these topics about Social Security, about Medicare and tax planning, also about income planning, insurance planning, investment planning, and legacy planning. We call it complete planning, and we call it the Maggi plan.
And these issues are for many of us heading into retirement, and some of you are already there. We'll be talking about a slew of issues related to retirement and sort of highlighting the pros and cons of each side. No decision is, or rarely, going to be an appropriate decision, and procrastination is not a retirement plan. It's just going to be a matter of individuals weighing the pros and cons. We take a holistic approach.
But we believe that simply knowing the pluses and minuses is a really important step. And the takeaways you'll get from every show this week and every week is to help benefit you. So you can understand the retirement language. You'll be able to formulate a plan, and again, we call it the Maggi plan, that we believe it's simple and easy to understand. And we believe this may help you make important financial decisions. So sit back and enjoy today's show. Be sure to visit MaggiTax.com for more information. And at 11 a.m., tune in at the Maggi Tax and Financial Show on 970 WFLA. So here we go, and welcome to the Maggi Tax and Financial Show.
You're watching the Maggi Tax and Financial Show with Bobby and Chris Maggi.
Welcome everyone to the Maggi Tax and Financial Show. I'm Jamie Malm, and with me today, Bobby and Chris Maggi from Maggi Tax Advisory Services and Maggi Investment. Thank you guys for joining. Today we're going to talk all about women.
Oh boy.
So,
oh boy.
I don't want to scare you off, but women do face some specific challenges in retirement. And one of the things that we see is very common with women is they tend to control the day-to-day finances maybe of their household, but they have a tendency to not be as involved in some of the long-term planning. Why do you think it's so important that women get involved in those long-term planning decisions for their financial lives?
Why? Because when a spouse dies, most of the time they don't understand what the husband did or what they have in terms of assets and what to do with it. They just don't have the communication with the advisor because they don't want to be involved, or maybe the spouse says, I'll take care of it. And that's how my father was. My mother didn't know anything until, my dad passed away. So I think it's a mistake, but a lot of women also don't want to be involved. They say, no, let my husband do it. And what we try to do, Chris and I, we want husband and wife to come in. So when a client comes in and says, I'm here and I'm going to talk about my finances, but I don't have my wife here, we won't talk to them. And the reason is because it'll come back, and then the wife will have to be there at some point. It's just that they have to get educated on what it is. It's not easy, I get it. But women have to understand it's their money too. If you're married and you have joint accounts, it's her money too. The problem is that we see a lot of, maybe widowers and widows don't know what to do when someone passes away. We had a situation last week. The wife called me up and she said, Bobby, she said, I don't know what to do. I got all this money, what do I do? And basically on the radio, we tell people do nothing. Don't do anything until the dust settles. And let's sit down and talk about it. Again, it goes back to educating and trying to understand the language. They don't understand it. It's not bad, don't get me wrong, but they have to learn. That's what they have to do.
And it doesn't matter if you're male or female. Think about this. You're working. Women are working. And they're
More so
earning.
now than ever.
Right, and they're doing a great job. And they have these 401ks. And they're putting the hard work in. And they have their own retirement accounts. And they don't know what to do with it. So it doesn't matter about gender. I mean, everyone has to feel empowered. You know, women feel, seem as if sometimes they're scared, but they don't have to be. You know, they should own what they have, because it's the same with everybody. They have to make sure the transfers the right way. They have to make sure that it has a purpose with those accounts. And, you know, that's why when you come in to meet with us, we want to educate you. It's about educating you on what you have, where you can go, and that's what will make it simple for you.
And really, women at some point in their lives are likely to live with the financial decisions their spouse has made. They've got longevity on their side.
That's true.
And I think the dynamic of women being involved in financial decisions is definitely shifting. But we still see a lot of women that feel like maybe they're just not as confident in themselves. And men don't typically have that problem, right? They're confident. Should be or not.
What do you say, Jamie? I think it's because they know what told them.
How do we get women more involved? How do we give them the confidence to come in and say, hey, there's no question that's off the table. There's nothing that you can ask that is a dumb question. Don't you think that's an obstacle for some?
Absolutely. But we've made it simple for people because of the objective we take. I mean, it's a plan that you want to own, right? So we make it simple. We educate you, and you have to be educated. So we're not going to confuse you. You can ask the questions, and you should. This is your money. So once you meet with the right advisor, someone you feel comfortable with, you shouldn't feel threatened. You shouldn't feel overpowered. You know, everyone's the same here. You know, just because we're doing our TV show here and we're helping people doesn't make us better than you. I mean, you work hard. You know, you have values. You have things that's important to you. You should have the ability to speak up and talk about what's on your mind. I don't care if you're male or female. But you should work with someone who feels the same way. And there's some advisors in this industry and some doctors we see that are very dominant, and and it shouldn't be that way. And people feel fearful and they're scared. But in the finance industry, so work with the right advisor, meet with multiple advisors, get the feel, ask the same questions. We love it when people come in and say, I'm interviewing you.
Yeah, good point.
I'm interviewing you too. Do I want to work with you too? So if I feel as if the husband's really dominant and the woman just sits there and doesn't ask any questions, I really don't know if I want to work with that. I'll tell you why, because something might happen to her and then he wants to make the dominant decisions over what she wants to do, and she has no input. It's not fair. So work with the right advisor, someone who you feel comfortable with, and don't feel as if you can't ask the questions.
Good points. So interview, make sure you're comfortable, ask the questions, and get involved, really, is what we want. Because the major obstacle right now is likely that women just aren't involving themselves as much as men.
And they also think that they have to learn all this stuff, right? The financial jargon is overwhelming, but it doesn't have to be that way. So make it simple and easy, and that's what the Maggi Plan's all about.
And the other thing is a lot of the people come in, they're women, they bring their kids in because they want some help. So they're asking for help. They don't know what to ask, and they're afraid, they're intimidated. And you don't have to be. It just doesn't. Men are intimidated too. It goes both ways. But again, it goes back to understanding the language and trying to make it simple so they get it, so they can make the right decision. I mean, it's their money, so they worked hard and long for it. Make sure you get it.
So regardless, if we have couples, if we have widows, if we have divorcees, we want to help everybody. We want women especially to feel comfortable and empowered to make decisions. What do you recommend for women that are listening right now that want to get started?
To sit down and have a conversation, but before you come in, be prepared to talk. Be prepared to listen. And be prepared to be not told. I think that's the biggest reservation. They're going to come in, and we see this all the time. You know, I'm not sure I want to be here. Well, why? Tell me why. Because they're so intimidated by what Chris said, the industry itself. So that plays big, but they have to come in, and we do this all the time. I think that's what makes our company different. Let's listen to what you have to say, and if we can help you, we will. And the best thing is if we can't, we're going to tell you, because we're not going to take what you have and make it worse. We want to make it better. Or if your husband left it to you and it's better, then stay where you are. That's what they need.
Transparency.
Exactly. That's what, exactly. 100%.
And how does somebody reach you?
That's easy. Call us at 833 Maggie Tax. Please visit our website at MaggieTax.com. We have a lot of videos on there, and we have especially one for empowering women, which is big when people come in and say, we saw the video, and they felt more relaxed knowing what was going to happen. So 833 Maggie Tax. Visit our website, MaggieTax.com.
The video is a great point. People always like to know
Yeah.
what to expect
Oh, yeah.
before they come in. So thank you both for joining, and thank you all for joining us again. Stick with us. We're going to be right back with more of the Maggie Tax and Financial Show.
You're watching the Maggie Tax and Financial Show with Bobby and Chris Maggie.
Hi, Chris Maggie here. Your tax bill in retirement could be a lot larger than you think. Taxes will determine how much of your hard-earned retirement savings you actually get to keep. To learn how much your retirement tax bill is right now, visit MaggieTax.com. In 30 seconds, our free retirement tax calculator will show you what your current retirement tax bill looks like. Visit MaggieTax.com. The first step in lowering your retirement tax bill is to know what yours is. Find out in 30 seconds at MaggieTax.com. Welcome back to the Maggie Tax and Financial Show. Life is full of surprises, good and bad. But an emergency fund can help you manage some of the most unpleasant financial shocks that many of us, sooner or later, are faced with. Whether it's replacing a dryer that gave out in the middle of an all-day laundry marathon, plane tickets to the last-second wedding of your best friend from college, or a sudden surge in gas prices, or even having enough money saved to handle those scenarios without relying on credit cards or a loan, may be a solid financial step. Many financial service professionals recommend having 3 to 6 months worth of expenses saved up in preparation for the unexpected. A Motley Fool's article, 4 Steps to Building Your Emergency Fund, offers some tips that you may find very useful. The article first recommends building a budget. Sounds simple, right? But you might be surprised at the number of people that we work with who haven't taken this important step. To create your budget, write out your recurring monthly expenses before listing out once per year expenses like annual memberships. Compare that tally against your monthly take-home pay. That may give you a reasonably clear picture into how much money you may be able to save both monthly and yearly. For once-a-year expenses, dedicate maybe 1/12 of the amount to your monthly spending. For example, if you have a club membership that runs $300 per year, allocate $25 per month to that expense. And let's imagine your expenses are currently running you $4,000 per month against your after-tax monthly income of $4,300. That means you may be able to save as much as $300 a month, which isn't terrible, but if your emergency fund is currently empty, it's going to be a tough road to build a fund that can cover 6 months' worth of living expenses. So which brings us to step 2, reducing your expenses. Everyone has needs and wants. We all have needs and wants, but while you may not have much wiggle room with your needs, it may be a slightly different story with your wants. What does your budget show you in terms of non-essential spending? Are you eating out far more than you realized? Do you have more streaming service subscriptions than you could ever possibly watch? There are also bigger ticket ways that you may be able to cut expenses and boost your emergency fund. Do you live in a much bigger house than you really need? Downsizing to a smaller home may not only save you a potentially significant amount of money, it may make your life easier because of less upkeep. Do you have a large vehicle that's costing you a fortune in gas? Why not trade in for something that's a little smaller and more fuel efficient? Everybody's budget is different, as are their needs and wants. But in many experiences, I just talk about everyone find a couple of ways that they could cut their spending without taking the enjoyment out of life. The article's 3rd recommended step is to bank any bonus cash that you may receive. If you receive any kind of windfall during the year, whether it's a pay raise, bonus, or even a tax refund, funnel that money directly into a savings account before you spend a single penny of it. Since this is money you clearly don't need to cover your monthly expenses, it's simply smart strategy to squirrel this money away until you really need it. And the final way to potentially beef up your emergency fund is to develop an additional income stream. Often, this can be done by getting a second job or creating a small work from home businesses. Let me emphasize that a side gig doesn't mean that you're working overnight shift to a warehouse or anything like that. You can earn extra money doing something you're passionate about, that you'll enjoy. A second job may help you quickly reach that 6 months worth of expense goal for your emergency fund. And once you hit that mark, why not go for a year's worth of living expenses? That's especially true if you're enjoying your side hustle. And remember, not having an adequate emergency fund means you're leaving yourself at the mercy of the unknown. Those unexpected expenses can be very scary. If you live someplace cold and the heater in your car stops working in the middle of January and you don't have an emergency fund, you're either looking at a frigid commute or using a credit card that probably has a double-digit interest rate. Emergency funds matter, but don't let the process overwhelm you. A financial service professional can help make that process simpler and your goals more achievable. Contact my office at MaggieTax.com or 833-MAGGIE-TAX so we can discuss the importance of an emergency fund and what you can do to make yours as robust as possible. We'll be right back with more of the Maggie Tax and Financial Show after this.
Listen every Saturday at 5 p.m. and Sunday at 11 a.m. to the Maggie Tax and Financial Show, where we discuss retirement solutions and the Maggie Plan. The Maggie Plan is a tax plan, insurance plan, an investment plan, an estate plan, and college planning that is simple and easy to understand. Every Saturday at 5 p.m. and Sunday at 11 a.m. on 970 WFLA.
For a complimentary review, call 813-909-0022 or visit one of our 3 locations in Tampa, Palm Harbor, and St. Petersburg.
Do you know a family who's struggling to make ends meet due to no fault of their own? Bills piling up, making it tough to stay afloat? At Maggi Tax Advisory and Financial Group, we're here to help and we need your support. This year, we're searching for a local family in need and offering them a lifeline, 12 months of mortgage or rent payments. Imagine the peace of mind a year with a stable home could bring. If you know a deserving family who could use this support, nominate them by visiting MaggieGivesBack.com. And if you're inspired to help even more, consider making a donation to support this initiative. Every contribution helps us make a bigger impact. Maggie Tax Advisory and Financial Group. Together, we can make a difference, one family at a time.
You're watching the Maggie Tax and Financial Show with Bobby and Chris Maggie.
Hello and welcome back to the Maggie Tax and Financial Show. Today we're going to discuss some of the important elements of Social Security survivor benefits. While many people have a basic understanding of these benefits, it's essential to broadly understand what may be available to you. And I want everyone to know that we're going to offer a free Social Security maximization report so you can see what your benefits look like and when it is the best time to take it.
Yeah, we have some insights that I think is very important for all of you watching the show today. In many, but not all cases, you're eligible to receive survivor benefits at age 60 years old.
But there are more circumstances in which you can begin taking survivor benefits before age 60. Surviving spouses may be able to start taking benefits at age 50 if they're disabled, and at any age if they're caring for a child of the deceased beneficiary who is younger than 16 or is disabled and is accordingly entitled to childhood benefits because of it.
Yeah. And the next thing you should know about survivor benefits is that there's no deadline to claim them. That means you don't need to feel pressure to apply for them within a set period of time after your partner's death or even at your earliest eligibility age. You could decide when you want to begin taking them or whether you even claim them at all. You could do whatever fits best with your financial strategy and goals. And we can help you understand what we call the language.
So you should promptly report your partner's death to the Social Security Administration. Funeral homes and similar entities will often take care of this step for you. But if not, then you can call Social Security's national hotline at 800-772-1213 to report the death. You may also report the death to your local Social Security office. And if you prefer, reporting your partner's death may trigger a one-time $255 death benefit for the surviving spouse. That one-time payment doesn't affect future survivor benefits.
At this point, you're probably wondering if the deceased person has to already be claiming Social Security for the surviving spouse to receive the survivor benefits. And the answer is that you may begin collecting survivor benefits even if your spouse had not started claiming their benefits prior to their passing. Survivor benefits will often be based on the amount of the late spouse's full retirement benefits. which is the amount that they would have received had they waited to file at their full Social Security retirement age. And the FRA, or full retirement age, is 66 years and 4 months for those born in 1956, and it gradually rises to age 67. If the deceased spouse had worked past their full retirement age without filing for Social Security, the subsequent survivor benefit grows to reflect the delayed filing credits the deceased spouse would have been entitled to. So widows and widowers are also entitled to 100% of their late survivor's spouse's benefit if they claim survivor benefits at their own full retirement age. And the full retirement age is different for survivor benefits, which is currently 66, but also will slowly rise to age 67 during the next handful of years. What does that mean for those filing earlier?
Good question. At age 60, you may collect 71.5% of what your former spouse was receiving each month or would have been entitled to receive. From there, that percentage goes up in stages for each month that you put off filing until your own full retirement age. And be aware that any reduction that you face for taking benefits early, it's permanent.
You also receive 71.5% if you claim benefits in your 50s as a disabled surviving spouse. So for those younger than age 60 who claim survivor benefits because they're caring for a deceased person's child or children, the percentage is a fixed 75%. The fact that these percentages vary based on your choices is a reason why to work closely with Maggi Tax, because we're going to run a free Social Security maximization report. We can help you understand the language, and that's what we do.
If you were already collecting spousal benefits prior to your partner's death, Social Security will automatically convert them over to survivor benefits once they've been alerted about the death.
You can collect a survivor benefit and a retirement benefit at the same time. So if you're eligible for 2 different Social Security payments, both as a retiree and a survivor of a retiree, Social Security calculates which payment is bigger and provides you with that amount. If you're in the unfortunate position of being widowed twice, you aren't able to collect survivor benefits based on the earnings of both your former spouses. Social Security will simply provide whichever one is larger. If your own retirement benefit is greater than either one of your survivor benefits would be, then you'll get that amount.
Here's another wrinkle. You can switch from one to the other. Retirement and spousal benefits fall under a rule called deemed filing. With deemed filing, when you claim one benefit, you're considered to also be claiming the other benefit. If you're eligible for both of them, that's not the case when it comes to survivor benefits. If you aren't already receiving any Social Security benefits, you can apply for that. And survivor benefits simultaneously, you'll receive whichever is the larger of the 2 amounts. But you don't have to, and that provides you with some financial strategy, what we call flexibility.
So here's a scenario. Your late spouse made significantly more money than you did during their life. You may want to ponder claiming your retirement benefit first in order to have some Social Security income. Then wait until your full retirement age to take the entire larger survivor benefit. You could also flip this example around if your retirement benefit would be larger. Certainly, this is a part of the process that could get a little tricky. So that's why we recommend working through it with Maggi Tax and Financial Group. We understand Social Security and we need to explain the language. That's what we do when we run the free Social Security maximization report. And all of that, what we're talking about today, will help you better understand more now than what you're really working with.
As for how divorce plays in our conversation, the biggest thing to note is that divorce isn't disqualifying. If you were married to someone for a minimum of 10 years before divorcing, you may be entitled to survivor benefits based on your former spouse's earnings history when they die. And the rules on age and payment amounts for a divorced spouse are identical as those for widow or widower.
Yeah, so taking benefits as a surviving ex-spouse doesn't affect survivor benefits paid to the widow or widower, or vice versa. If both filed for Social Security at their full retirement age, both would qualify to receive 100% of the late ex's benefits total. So what happens if you're remarried?
Well, good question. If you walk back down the aisle before you turn 60, or 50 if you're disabled, you're no longer eligible for survivor benefits based on a previous spouse's earning history. You may regain eligibility if your latter marriage ends because of divorce or death, and remarrying after those ages doesn't affect your eligibility for survivor benefits related to a previous marriage.
Depending on the circumstances, children may also be eligible for survivor benefits. Children of a worker who has died may be eligible to collect survivor benefits of up to 75% of what their deceased parent was either receiving or would have received from Social Security. As of July 2022, almost 2 million children were receiving survivor benefits. Children may receive survivor benefits if they're both unmarried and under the age of 18. They may also be slightly older if they're still attending elementary or secondary school on a full-time basis. So eligibility ends at high school graduation or age 19 years and 2 months, whichever is first.
Those disabled because of a condition that happened before age 22 also qualify for survivor benefits. Stepchildren who meet any of the criteria I just shared may also qualify in certain situations. So when you apply for a survivor benefit on behalf of a child, you'll be required to provide proof of their relationship with the deceased. A birth certificate or adoption record is usually sufficient.
So contact our office today at MaggieTax.com or 833-MAGGIE-TAX so we can discuss survivor benefits as well as your free Social Security Maximization Report. As you see, there's a lot of information that we discuss. We can help you understand the language. It's simple and easy to understand.
We'll be right back with more of the Maggi Tax and Financial Show after this. Pay less tax with Maggi Tax. Hi, Bobby Maggi, owner of Maggi Tax Advisory and Financial Group. Right now, you're paying more for almost everything. It doesn't have to be that way. When we say pay less tax with Maggi Tax, we mean it. If you want to pay more to the IRS for taxes, that's your business. If you want to pay less tax, now that's our business. Call us for a free tax reduction analysis and enjoy paying less tax with Maggi Tax. Listen every Saturday at 5 p.m. and Sunday at 11 a.m. to the Maggi Tax and Financial Show, where we discuss retirement solutions and the Maggi Plan. The Maggi Plan is a tax plan, insurance plan, an investment plan, an estate plan, and college planning that is simple and easy to understand. Every Saturday at 5 p.m. and Sunday at 11 a.m. on 970 WFLA.
For a complimentary review, call 813-909-0022 or visit one of our 3 locations in Tampa, Palm Harbor, and St. Petersburg.
We hope we gave you all the information during today's show, all the pluses and the minuses, the benefits and drawbacks, as well as the considerations to make the best decision. We say your retirement decisions are too important to not do something. So the one thing that Chris and I always agree on is that you should make sure you're discussing these important decisions with a knowledgeable financial advisor or tax professional so that you can weigh them, that you can weigh the pros and cons of the different options against your specific goals and circumstances.
And we'd love to hear from you. You can reach out to us by visiting our website at MaggieTax.com or pick up the phone, schedule a time to meet with us. Call 833-MAGGIE-TAX. We have more topics that we'll be discussing in the upcoming weeks, and we sincerely hope that you're able to make better decisions because of the information you have learned here today. We thank you for joining us. Get the Maggi Plan. It's a plan that's simple and easy for you to understand. This was fun, and we sure look forward to doing this again.